Hey folks, hope you're doing well. I threw together this quick graph to kind of bring you up to speed on a few things here. I'm going to read this to you, then we'll talk about this real quick. The Federal Reserve recently lowered its benchmark interest rates on September 18th. Remember this a couple weeks ago? But oddly enough, the 30-year interest rates have increased. Just because the Federal Reserve and all the experts think that lower rates are ahead of us doesn't mean it'll go in a straight line down further, does it? Nope, not exactly. So last week, the payroll report came out and we had really good jobs, 254,000. It was significantly higher than expected, and that led to a big sell-off or a crash in bonds, which meant higher rates. And it was further exacerbated by the Federal Reserve remarks from Chairman Powell that said that the economy is going to be robust and they'd take their time and would approach further interest rate cuts with patience. So since this happened on the 18th, the market's actually lost about 200 basis points, which means that rates have actually gone up about 0.5%. So the lesson in this and the way it affects you is the markets, they look forward. So we knew all along that the Feds were going to cut rates here on the 18th, and mortgage-backed securities and interest rates, they didn't wait for the Fed to announce that. They already went lower. So this part of the graph here, this shows, even though the arrow is up, that's the price of bonds, meaning that as the price goes up, interest rates go down. So rates were getting lower going up into the announcement a couple weeks back. Since that time though, man, we've fallen off a cliff, and rates now are actually about 0.5% higher than where they were when we were going up into this. This was kind of the sweet spot leading up to this before they kind of went down. So if you missed the boat, fear not, this too shall pass. We have a saying in the industry that the cure for higher interest rates is higher interest rates. And so I think this is a little bit overblown with how quickly we've fallen down, and I think it'll settle out. What it's saying is the market's just trying to find a bottom right now. So the way that affects you is if you missed out and you weren't able to refinance here in this little window, it's going to be fine. We'll see things kind of settle down. Hopefully I'll reach out to you when the time is right, and you can always reach out to me as well, of course, and to see if you benefit. But that's what's going on, guys. Thanks for watching. If you have any questions, please reach out, and we'll see you next time. Thanks.